Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay, home ownership consultant at thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, can we take anything? Bloomberg reporting U.S. new home sales are at their highest rate in 12 years. Is that really true, and is that much to brag about?
Things to brag about. You know, it's the Americans have watched as the median price of a new home has fallen since 2017. Okay, now you haven't seen that reported on Bloomberg. You haven't seen it in news headlines, but you can go right to the local St. Louis Fed and look at their chart. The median price is falling. Why is the median price falling? Because the mortgage rates initially went up, which precipitated a lowering of the amount of home a home buyer was able to buy. So since the home buyer couldn't spend as much money, they bought a cheaper home. What happened? The median sales price drops. Not because the price of a house has dropped, but because the type of home being purchased was a cheaper quality home, a lower priced home. That's what is going on. Now, when you look at sales, if you're foolish enough to use seasonally adjusted data, then that simply means you don't understand why you can't use it. We don't use seasonally adjusted data. Housing analysts, realtors, organized real estate, bank economists, they all use it. They believe it's true. If you read what seasonally adjusted numbers are not supposed to be used with, are markets that are not impacted, that are cyclical outside of a calendar year. In other words, the cycle doesn't follow any 12-month pattern. Now, buyers may follow a certain pattern over a 16 to 18-month period, but that pattern shifts. That pattern can be longer. The cycle itself is not cyclical on a consistent basis. They always change. That's what you're having out of the United States right now. Unless interest rates fall, your housing market is going to have to go through a period of correction. Whether that correction is a full correction or is a simple contraction will be dependent on how the housing market impacts the rest of society. So Bloomberg really shouldn't be. Well, actually, here's some real irony, Jim. You're going to be shocked at this one. The number one housing reporter in Canada for Bloomberg just announced today that she's going to go down to the United States, to New York's head office, and start reporting on U.S. commercial real estate. So the reporter at Bloomberg, who has published reports from organized real estate, regurgitated their talking point for the last 4 years, misleading the readers who relied upon her reporting to be critical, which it never was. She simply regurgitated their talking point, is leaving Canada as the housing market is correct. You can't make this stuff up. It's no wonder that Bloomberg, down in the States, now that he's running for office, has said Bloomberg News is not going to be reporting on, critically, the Democratic Party. You know, this is like the Canadian Real Estate Association in Canada saying, we can't report anything negative about ourselves because it might hurt us. Bloomberg's doing the exact same thing in the United States. So the irony of this reporter from Canada, who has misled the Canadian public for years because she failed to do her job, is not lost on us.
We'll have more with Ross Kay right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, StatsCan released a new survey about evictions and foreclosures that is now making the rounds of BC, being cited as the nation's highest. A listener wonders, is this bad for tenants in BC?
It's bad because the authors and the readers of the survey responses is reading them incorrectly. So for tenants of BC hoping to have a proactive solution to a remediation of your housing stock to accommodate an expanding of your life, it's not going to happen because the survey is being misread not only by StatsCan, but by people out in British Columbia commenting on it. You've got Andy Yan, Professor at Simon Fraser, already out there with charts claiming that the number for BC is so much higher than the rest of Canada that it is they're going to have a false narrative being assigned to it. And it's simply because Mr. Yan continues to make fallacious statements that the data does not support. While the stats may support it, the data does not. This StatsCan report is comparing British Columbia or Vancouver to Ontario or Toronto. Those two housing markets were functioning in different ways over the 5-year period this survey was making commentary about. The housing market in Vancouver and in Toronto are structured totally differently. The home ownership rate, we measure home ownership totally different than what StatsCan does. Our home ownership rate, in other words, we call these privately owned, owner-occupied homes, is totally different in Vancouver than it is in Toronto. And the 3% difference in the eviction foreclosures coming up as a percentage difference as coming up in this survey, when you remove those uncomparable features of the two areas, the two cities are identical. It's got nothing to do with greedy landlords. It's got nothing to do with more foreclosures. Number one, what it's got to do with, British Columbia's trading rate was greater over that 5-year window than Ontario. Vancouver's trading rate was substantially higher than Toronto's. Toronto's home ownership rate is higher than Vancouver's. Those two things combined wipe out the 3% difference. So when you're talking Toronto, 7% of those what they recorded were as to evictions and foreclosures versus 10% in Vancouver. Those two numbers are, when they're adjusted, identical. Why are they identical? They're identical because the home trading infrastructure in Canada is virtually identical from coast to coast. We have a national mortgage default insurer. We have national gross debt service ratio. We have national total debt service ratios. We have a national oversight of Canadian banking mortgage lenders. We may have different organizations overseeing the real estate brokers, the mortgage brokers. We may have different taxation rules in our provinces. The municipal tax base, the municipal tax rate in Vancouver and Toronto are two radically different things as they are in Calgary or Windsor. Those items, in turn, impact house price. House prices, in turn, House price change, in turn, impacts foreclosures and eviction. These are cyclical in nature, meaning in a more rapid trading rate, you are going to see a higher rate of instances where people are being asked to leave their house because the owner wants to sell it to capitalize on the house price gain that they've recorded. Nothing else, nothing more. And when you adjust for those differences, they are identical within a margin error of like 0.01 or something ridiculous. We don't even bother with measuring it. It's so small, Jim. But what this has done is once again created a false narrative. The same false narrative about the foreign buyers. The foreign buyers hurt British Columbians because organized real estate failed to explain to everyone how your average selling price is skewed, which causes house price illusion, which inflates your housing bubble, which then must break. Had the real estate brokers simply completed their FINTRAC forms, filed them with CRA would have investigated beginning in 2014. This skewing of your average selling price never would have happened. Your housing bubble never would have gotten as big as it did.
So what you're saying, Ross, is we got skewed.
Yeah. That's a great alternative spin on the word, Jim. You literally got skewed, as did the rest of Canada. What bothers me is that proactive solution to the most important aspect of our lives, the roof we put over our head, how we house people, how people build wealth through home ownership, how the homeless are taken care of, are never discussed because of these false narratives. Because everyone is looking at the shiny bauble instead of the tree the shiny bauble is hanging on. You've got it out in Kelowna right now. They're complaining about homelessness, okay? It is a legitimate concern for every municipality in Canada where there is a single homeless person. Yet there is a building in Kelowna for sale today that was used for a senior citizens building. Looks like it's in fairly good repair. It's vacant. It can house 14 homeless families or homeless people in the 15 units that it has. It's only $1.5 million. That means for less than $600 a month on a well-crafted, low-risk, low-cost designed strategy to house those people, you can have them there for under $600 a month. But they don't talk about that because they have to look at the shiny bauble. British Columbia, Vancouver, tenants associations. Oh, we're rent-evicted. Oh, we're evicted. Yes, those things are true. I'm not downplaying it. But what you should have been understanding is those things are legal in a country like Canada, where we have freedom of will, where we have the freedom to buy a home, rent it to a tenant, and sell it at a future time. That is what our society has been built upon. If it wasn't for those landlords, those tenancies would not even be available. Where the blame should be is the government are not being encouraged to attract more investors into that segment of the market under the high compound annual growth rate affordable tenancies are able to provide and the long-term returns to things like pension plans or even single investments that they're able to return because everyone's looking at the shiny bauble. The bauble this week is evictions and foreclosures are higher in BC than anywhere else in Canada. False, fake, scam. It is a misread of the data because you are comparing two housing markets that are totally different. Although those two markets are forced to function under the same infrastructure.
Ross, a listener noted that CIBC has gone on record stating the Toronto housing market has entered equilibrium. They want to know, what the hell does that mean?
What was it? The market is stabilized. We saw reports across Canada. The market is stabilized. And we saw CMHC, Government of Canada, bank economists, real estate brokers, everybody but your father and mother saying the Canadian housing market has stabilized. Bull crap. The Canadian housing market has continued to correct the entire period of time. Please provide us what a definition of stabilized is. None exists. Now we're on to the market has reached an equilibrium, Jim. The market has reached an equilibrium, CIBC said, and I saw the report. CIBC was the most robust originator of mortgage loans between 2013 and 2007. CIBC's mortgage portfolio is younger than the other Canadian banks. Even though CIBC withdrew from the mortgage lending market to a certain degree post-2017, the damage was already done. It's on their books. CIBC, as a result, is the most exposed to a correcting housing market. So it's in their best interest to present a view of the market that allows home buyers to continue to pay down their mortgage debt and offset CIBC risk. That is exactly what is going on with this new equilibrium. We can probably expect to see other voices, other talking heads, jumping on the equilibrium bandwagon. Those people who jump on it know that the Canadian media, the Canadian press, those reporting on the housing market, which is still over a $6 trillion business, by the way, folks, won't do any critical reporting. Guys like Jim, who do this show, are not being hired outside by mainstream media. A guy with the skill to ask the questions necessary to draw out a truthful answer from the person that he's interviewing are not being hired. Now, I'm not saying he wants to be hired to return to that, but I'm telling you, if I had a radio station in British Columbia today, I would be hiring this guy in a second, and I would allow him to do the job that he took years learning how to do, critical reporting. The first time that he went on air and didn't do his job, he would be fired. Now, of course, Jim's not the kind of guy they're going to hire, because that's exactly what Jim's going to do, and he's going to embarrass the rest of the reporters in the newsroom. They're not going to live up to the standard that I believe you probably were taught in journalism school, Jim, I guess.
Well, I taught in journalism school.
Oh, there we go. So I guess I'm not wrong, right? I guess I'm not wrong.
Yes.
The equilibrium myth, like the stabilization myth, like the average selling price myth, like the housing market is doing this, doing that myth, is only allowed to exist because reporters are not doing any kind of critical reporting. They blame it on everything you can come up with. Oh, can't see the data. Oh, they keep it private from us. Oh, that's not what CMHC says. Oh, can you prove that to us? Yeah, right. I'm going to prove it to you. Look in the news. We called Calgary, Alberta. We called the Alberta housing market. We called the BC housing market. We called the Ontario housing market. We called it months and months before the market turned. Months before there is another article anywhere in this country matching our call. You need critical reporting, folks, as the CIBC report said. We need to demand that those we are paying for media content, news, hires people who are critical reporters, not simply ones who regurgitate clickbait headlines created for the benefit of stakeholders.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener in Calgary asked what impact 1,000 job losses can have on a city.
Yeah, I guess that was I think that news was last week that they talked about another 1,000 job loss. Some companies closing up to 1,000 jobs lost. Okay, so if I had all of the data for those 1,000, the families associated with those 1,000 jobs, if I had the home ownership data available to me for those 1,000 families, I could tell you exactly to the nickel what the impact is going to be on the city of Calgary. I would also be able to tell you the impact on the province of Alberta, and we probably could extrapolate with a high degree of accuracy what the impact is going to be at the national level. 1,000 job losses, even if those people are immediately reemployed, are going to have consequences across the city they happen in. Assuming 100% of those employees live in Calgary, for the sake of the argument. The size of Calgary is different than the size of Edmonton, the size of Vancouver, the size of Toronto. So those job losses on the housing market will have a different impact. A certain percentages of those families, depending upon where they are in their lifetime of ownership, will sell, trade up, trade down, solely dependent upon the change of employment. If it's unemployment, they probably have 4 to 6 months before a radical action is going to take place. You then have another 6 to 12 months before that change is recorded in real estate data, and basically 2 years before you realize what has really gone on because of those losses. This is why when we say on the show, Jim, that we have such an extreme lead time with our housing data. Housing markets take this long to change. Everybody says, "Why, Ross? Why are you not seeing the numbers that you're saying?" We're seeing the numbers. Okay, we're watching them live. They're coming in each and every week. We see the numbers that we're talking about. We also know that the way that these things are reported take months and years before the public is aware of what's going on. It's why you get to the timing the market is so easy and so accurate, because you have such a huge lead time. You can never be wrong. 1,000 job losses in a city the size of Calgary, if those people had owned homes for over 20 years, could have not a culminating event. It could be an event that sets off a cascade of other events that has been working in behind the scenes now since the price of oil dropped. The impact is great no matter what happens. A simple job loss of 1,000 jobs that causes the homeowners to have financial stress will sooner or later result in a higher percentage of those homes coming onto the market. Those people are what's called must-sell, people who have to sell their homes. Those people will drop their prices more rapidly. When they drop their prices more rapidly, home buyers will rush in. Organized real estate will present that as the market's getting busier. All of the falsehood, all of the shiny baubles, all of the fake housing myths, all of the myths that everyone believes are perpetuated by situations like this. So for the listener, I'm sorry, without seeing all 1,000 employees, home ownership situations, we really couldn't make a comment. What we can say is this: you cannot lose 1,000 jobs in the city of Calgary without huge consequence, regardless of the retraining programs, the new employment jobs, or even if all 1,000 of those families left. The consequences are unavoidable, and they always come home to roost.
Ross, you're on record here stating your data shows that the economy follows the housing market and not the reverse. Then how come we're not seeing that reported in the mainstream media?
Okay, so you're not seeing it reported in the mainstream media, but I am. So we are not going to see people walk off a cliff. In other words, retail sales are not all of a sudden going to walk off a cliff. Retail sales first slow and then begin to decline. When you're using year-over-year comparisons or percentage change, those changes are hidden. It's the same reason why organized real estate reports percentage change year-over-year, and why we don't. We report year-over-year dollar change. It is a totally different thing, Jim. It changes your world forever when you stop talking in percentages and you start looking in dollars. Retail sales are exactly the same. As the momentum from the housing market was removed, net wealth begins to decline. Right now, we're sitting somewhere around $390 billion, or 1/3 of $1 trillion in recordable appraised value wealth for Canadian homeowners has taken place. Now, I'm talking about almost $400 billion of accessible wealth is no longer there. People feel that in their bones. The owners of the homes understand this. The euphoria of watching their house continually increase is now creeping back in as, oh, maybe that wasn't real. Maybe the wealth I thought I was going to have, or I thought I had, is really not going to be there, or really isn't there after all. It's called the wealth effect. The wealth effect takes a long time before it's revealed in the rest of the economy. Canada has a trade deficit around the globe. In other words, we need to borrow money to pay for the things that we're getting from other countries because we're not trading with them enough. We're not giving them enough Canadian goods. What that means is, as far as I can tell, so I still have yet to get a confirmed answer in any peer-reviewed article or any economist. The only way that you fund a trade deficit is through the consumer, the voters, taking on more debt. In other words, dollars leave Canada and go to other countries. That's okay when your house prices are increasing and home ownership wealth is increasing. But when home ownership wealth is decreasing, factually decreasing, because the appraised value of Canadian homes in aggregate has declined as more and more mortgage debt has been assumed just to sustain the level of decline that is already ongoing. Because when the tipping point is reached, and that if that mortgage debt is no longer booked, the appraised value of Canadian homes will plummet. Canadians can't take on enough debt to support our trade deficit. What I don't understand is this, Jim. If Canadians themselves are spending 98 cents of every dollar that they earn, and the government has recorded this themselves in Stats Canada because it's below 2%. Canadians are not saving 2% of their income in the bank. They don't do it. The StatsCan data is available for that, and I believe that is a highly accurate calculation. That 2% can disappear in a second because we have to make up for the trade deficit by using borrowed money. Why are the governments not explaining this to the Canadian public? Why are governments not explaining how home ownership wealth, which allows you to leverage that and purchase things, is dropping? Now, the reason why you haven't seen this in the paper is because the longer an upward swing in the market takes place, the longer it takes before you see the turn in the market. It's very simple. We've referred to this on your show before as the ocean liner. The more speed that ocean liner gets, it takes more and more time. An ocean liner cannot turn on a dime and go from 0 to 60 miles an hour or 60 knots. It takes a long time for that ocean liner to get up to speed. It takes more fuel to push that ocean liner faster and faster and faster. If you're not refueling that ocean liner, sooner or later the fuel runs out and the ocean liner begins to slow. If the ocean liner was traveling at 60 knots, which I know it wouldn't, but if it was traveling at 60 knots at the peak of the market, which I guess for comparison's sake, we can say the housing market as of the 2017 was the fictitious ocean liner reaching a speed of 60 knots, something that had never happened before. It takes longer for that ocean liner to slow down. It even takes longer before people realize it's slowing down because it returns to the speed it was traveling at historically first. You're seeing that in the housing commentary right now. You're hearing commentary, sales are getting back to their 10-year average. Hogwash. They're not getting back to their 10-year average. The Canadian housing stock is substantially larger than what it was 10 years ago. You're listening to sales stats, not housing data. The reason why you're not seeing the turn in the market that we've recorded, that almost $400 billion in less home ownership shows on the economy is because the ocean liner, the Canadian housing market, was traveling at a record speed it had never traveled at before. And the size of the ocean liner was at a size it never was before. So you had two variables that have to work their way out before you see the turn in the market show up in other economic metrics. I do believe, Jim, that after this is done, there will be an opportunity to share how a housing market functions with economists and governments so that they understand what has taken place. But in the meantime, there is a tremendous amount of damage being done. We are already seeing the talk of, now is a good time to buy, start to return again. And I would ask your listeners this as we close the show today, because I think this is the last question. Why would you buy something if you knew it was going to be cheaper tomorrow? The largest purchase in your life is the family home, the thing you're going to spend the most money on buying and servicing over your lifetime. If you know that home is going to be worth less money tomorrow, why would you buy it today? Why would you encumber your family with 25 years of mortgage debt to satisfy the commission dreams of a local real estate brokerage? There's no need for those real estate brokerages to even exist. If the real estate industry cut itself in half, you got to remember, all you're doing is cutting out the one half of the sales reps who do not sell a house in a calendar year. They're gone. That means the ones that are remaining, on average, don't have to mislead the public in the same way that they are now to make a commission. They wouldn't need to tell people to go out and buy a home today. There are always people who need to buy homes. Always. There is a minimum threshold, a minimum trading rate that is always going to be recorded. That number of sales is going to take place. There is enough commission there to be made by those people that there's no need for organized real estate to lie, mislead, other than because they have too many sales reps. The same thing that the real estate agents believe themselves today, and they're being told by the leaders of organized real estate, so that those real estate agents renew their memberships on January the 1st, is the exact same reason home buyers are being told it's a good time to buy. Why other economic data is taking so long to be delivered. We had the largest ocean liner ever built in the world traveling at a speed that was never, ever contemplated before. It was a record size traveling at a record speed. That record is also going to be a record how long it takes to show up in economic data.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.